Sneaker maker Brooks Running has been a Berkshire Hathaway subsidiary since the year 2011. And joining us right now to weigh in on the brand's growth, manufacturing, the impact of tariff policy, and much more is Brooks Running CEO Dan Sheridan. Dan, thanks a lot for being here today.
Good morning, Becky. Thanks for having me.
You guys just this morning put out some really strong numbers for the first quarter, showing the growth that you've seen. And I have to say it's really impressive, just looking at some of these things. The 15% year-over-year global revenue growth, leading performance run brand continued for 8 consecutive years in North America, up 13% in the first quarter in revenue, 38% year-over-year growth in Canada. And that's fantastic. You guys have been putting up really great numbers, but that was all for the first 3 months of the year. And then a few days later, we had Liberation Day, and that's a big deal for you guys because you do most of your manufacturing in Vietnam. So what's the story? What's the impact from tariffs? What are you guys doing about it?
Yeah, super proud of the results of the team. You know, this has been a journey for Brooks over 20 years. We're the leader in performance run now. And the storyline for us is that we're growing across the globe. Every region was double-digit growth. Our EMEA group, record high for the quarter. Our North America business, as you mentioned, 8th straight year of growth in North America. And it's rooted in the participation rates of health and wellness around the world.
Yeah, and that got a big boost in COVID when people were working from home, had more time to run at home, and really got back into this idea of running as a lifestyle. But what do tariffs do to your business? How do you handle that?
Yeah. I mean, like every business, the uncertainty of tariffs is what we're trying to figure out right now. You know, we're somewhat fortunate because most of our products are manufactured in Vietnam and Indonesia. So we already had high tariffs coming out of those countries, 20% tariffs. So this additional 10 is, you know, it's a problem for us, but we're mitigating it not just on the tariff increase, but really trying to look at the full value chain of Brooks and addressing supply chains.
Meaning putting pressure on your suppliers to try and get prices down?
It's not pressure. We're working directly with them.
I bet they feel like it's pressure.
Yeah.
Right?
But, you know, I think this is a full value chain solve. It's not one part of the supply chain that we have to go after. So, you know, price increases, we're trying to be smart, be market right. We don't want to penalize the consumer with this. So we're really trying to approach it holistically. And the other thing is the uncertainty. We don't know where they're going to go. So it's really challenging for businesses.
Who's going to go?
Where the tariffs are going to go.
Okay.
Right. So you know, we were whiplashed in the last 30 days on it, and the uncertainty for us is, you know, is this additional 10% going to stay in place? Could it come off? Could it be higher? So we're trying to be measured in how we do it, but it's a challenge for us.
Have you changed your perspective just in terms of where you might do some of your manufacturing as a result?
Yeah, I mean, you know, making a running shoe is very, very hard. We talk about it in terms of fit, feel, ride for the runner. You know, on mile 22 of the marathon, it really matters if your shoe's going to hold up. And so what's happened over the last 50 years in Southeast Asia is they've become craftsmen of performance running shoes. And so to move that supply chain instantly is just not reality for us. So we're working hard on it. There's automation that's coming. We're talking about domestic manufacturing, but that's a 5, 7, 10-year process. It's not an immediate thing that we can fix.
10 years even?
Yeah, because if you think about it, all of the material vendors for performance shoes are based in Southeast Asia. So you've got a supply chain that's deep into the countries there. And so moving all of that will be really challenging for us. But we've been working on it for a couple of years, and we're making some progress.
You guys have really pushed international growth. When we were here with you last year, you were talking about opening up in China, and you had your first stores that opened there. You've seen sales that have been taking place there. It seems like you're doing a really great job with moving some of those things. But I wonder, is there tension that's been brought in by the U.S., China in particular? Is there nationalism you see there? Is there a pushback against American brands or not?
Yeah, I mean, our growth in China is pretty impressive. We were up almost 200% in the first quarter, and it's rooted in the participation over there. We have a stat that in 2020, there were 40 marathons in China. At the end of 24, there was over 400 marathons in China. So growth of running is what's driving it over there. And look, the uncertainty of the trade war is you know, concerning to us. But what we know about Brooks and the sport of run is when participation grows, we have a chance to compete and win over there, and we're doing that.
Yeah, and you've done it very well. I don't know if it's the technology that's in the shoe, if it's that you have some of the world's top athletes that are setting new records in these shoes. What do you think's been driving?
Yeah. I mean, we're a company that is a product company first.
Yeah.
And so we spend a lot of time on the biomechanics of human motion, how you build shoes for runners specifically. And what we've been able to do is do that consistently over a 20-year period. The thing about runners is once they find their shoe, they rarely switch because it's such an important part of their life, and Brooks has been able to do that consistently.